Hello, I'm Tom Brown with ISIS News, and I'm talking today to Paul Hodges, Chairman of International EChem, about movements in the oil market. So has the oil market turned a corner with the price increase?
I think almost certainly not. What we're seeing is a repeat, I think, of what we saw this time last year when people got hold of the idea that a reduction in the US drilling rig count was somehow going to lead to a reduction in US production. This was always a rather flimsy case, and what we saw in fact of course was that drilling rigs were becoming much more productive, and therefore there's been no fall off really in production there. What we're seeing this time round is an equally flimsy idea that somehow Russia and Saudi and the other countries they've agreed possibly to freeze production. Well, we haven't actually agreed to freeze it, but we might agree to freeze it if everybody agrees to freeze it. Well, Iran has said this is, quote, a joke, because of course Iran is looking to export more and get back to its world market share. So it's really very unlikely that Iran is going to cut back. Equally, the US has the highest inventory that it's ever had, going back to the 1930s, and so the only way you can reduce that is obviously to sell into European and Asian markets, which is what it's starting to do. Now the export ban has been removed. So this is a great story for the hedge funds. They've been given lots of free money by the Bank of Japan and the European Central Bank, so why shouldn't they have fun in the market? But it's a classic example of where stimulus programs have actually destroyed price discovery in the markets. What we know is that there is no change in the build of inventories. Everybody agrees at the moment that inventories are building by about 1 million barrels a day. So it doesn't really matter what's happening to supply. What's clearly happening is that demand is reducing. Look at what's happening in Brazil and Latin America, look at what's happening in Africa, look at what's happening across Asia, and look at what's happening obviously in Europe and North America. People are not using as much oil because the economy has slowed down. Now that is equally important, but the problem, I think, is that we have learned for the last 20 or 25 years to think only about supply. We haven't thought to think about demand. Where is the customer? Who is going to buy this? Is Brazil, one of the largest economies in the world, if it's in recession, how much oil is it going to use? Is it going to use as much as last year or less? These are the questions that we have to learn to ask again, because the supply-driven mentality of all we have to do is to produce it and they will buy it, I'm afraid those days are finished, and the oil market is telling us that. So yes, we may well get higher prices in the short term. The hedge funds have got a lot of free money, obviously, that they can have fun with. Does that mean the oil market has turned a corner? I really doubt it.
Thank you, Paul. From ISIS here in London, I'm Tom Brown.